Hey, welcome to the Bear Fruit Show, where we have our guest, Brad Nightingale. Super excited to have you here. It's going to be a lot of fun. What made you not want to go back? Was it just the excitement of stocks and trading?
It was, the Wolf of Wall Street kind of does portray the party atmosphere of the investment banking industry, and it is 1 for 10.
1 for 10.
You get one right out of 10. You have 9 of them go out of business.
Yep.
You get one right, you're making a ton.
Yeah.
And so, and the way you hit 3 out of 10 in baseball is you put the right coaches around you put the right people around you, the right team around you, and that's what gets you there. And it's the same thing in investing. You just have to know the right people, make sure you're getting in with the right people, and working with good, honest, hard-working people. Nothing comes easy.
Hey, welcome to the Bear Fruit Show, where we have our guest, Brad Nightingale. Super excited to have you here. It's going to be a lot of fun. Welcome.
Thanks for having me.
So Brad and I had met a couple years ago now. He was buying a house here in Durango, and from Phoenix, and loves the area and getting out of the heat.
Definitely this time of year for sure.
And it was really interesting. Just he had mentioned something kind of offhand, saying like, yeah, I think you just said you invest. Is kind of what you kind of left it at. And I remember wanting to learn more, and I learned about private placements and investments. And I was like, I bet you that's what that is. And I was like, let's go play golf. And now we're working on some stuff together, and it's a lot of fun.
Yeah, no, definitely. That is exactly how it happened. It was a mention in passing of what I did and the experience I had, and you being who you are, reached out to learn more.
Yeah. And I think that's always been something that I've tried to do. Is I believe you can learn from everybody. Like you can learn something from everybody, but always learning, always wanting to be the best student, I feel like has been something that has helped anybody really.
Yeah, well, as you and I've discussed before, it's who you know, and learning from the who you know, and broadening that network of people that you could lean on for information, because actual life experience is by far the best way to learn. Yeah.
I agree 100%. So Brad, tell me, let's dive into your story a little bit. I know you played some baseball, and we have that in common. And, and you're from Canada and all the fun stuff. But tell me your story. Where did you start, and kind of where you're going, where you're at now?
Sure. Well, my story does start in Toronto, Canada. I was born and raised there, went to school there, and did computer science in school. That was a long time ago. Computers were just becoming into the industry of everything, and that landed me a job doing computer networking for an investment bank in Canada, and that was nothing that was really part of my thought process coming out of school, but got into the investment bank, started to help them automate a lot of their processes from the computer science side, but not knowing anything about the industry, I asked for a placement for a job kind of out on the front lines in the investment at that investment bank to learn more. And
why did you want to learn more? What was
it? Not really knowing anything about the industry back then. This is late 80s, early 90s to age myself, but I didn't know what happened in that industry and how things worked. So to do my job better, I knew at a very young age I needed to get the experience to be able to do that computer side much better. And so I took a job as an assistant with a retail stockbroker. And it was supposed to be a 6-month contract, just go out, learn a little bit more about what happens out there on the front lines to be able to do that job better. And I went out to the front lines, and I didn't go back.
What made you not want to go back? Was it just the excitement of stocks and trading and just the investing side of things? What was it?
Yes, it was. The Wolf of Wall Street kind of does portray the party atmosphere of the investment banking industry, and I'm not saying that that's what we did, but even in the legitimate side of the business, there's a lot of fun. It's very dynamic. It's interesting every day, and there's always excitement. And there's downfalls too.
Sure. Yeah.
Learning to deal with the ups and downs in your emotions in everyday life is difficult.
Yeah.
But definitely a trait now that makes me very even keeled because of all the stuff I went through in the 90s.
Yeah. It's almost like you went through like the fiery furnace, like the Shadrach, Meshach.
Oh, absolutely. Absolutely. Yeah. No, the highs are high and the lows are low, and you learn to protect yourself on the lows.
Yeah. That makes sense. So, what was it with what allows you to stay so even or not? I mean, most people are very emotional traders. They see something on red, and they gotta sell it, and they see something on green, and they gotta buy it, and it really should be the opposite way.
Yeah, it's an amazing thing. I still struggle with it today. I've been investing obviously for the last 30 plus years, and if I'm running somebody else's money, it's a lot easier to do the right thing.
Yeah.
But suddenly, when you're trying to do it with your own money, your emotions get involved, and you really have to force yourself to go against what you're feeling.
Yeah.
And like you say, a lot of people, when there's excitement and the stock's going up and it's all green on the screen, they're buying it, and it should be the exact opposite. So, it's hard to do.
Yeah,
it is hard to do.
It is hard to do, but you feel like it's helped you in life, probably in raising kids, being able to stay pretty even, and marriage, and all this stuff.
Yeah. No, my wife had to deal with me, and God bless her soul, having to put up with me in the early days of me coming home, as down as I could possibly be, and then but also riding along with the excitement. But after a few years of dealing with all those ups and downs, I just started to get that even keel, and made things a lot better at home as well.
Yeah. Nice. That's awesome. So you went into investing banking, kind of on the front lines, and you never left. But what was kind of next after that?
Well, I started, as I said, as an assistant to a retail stockbroker, and back then, it was very dynamic. It wasn't necessarily. It was a little bit of the estate planning, mutual funds, putting money in, and managing an estate, but a lot of it was about doing deals and building companies and providing them the capital that they needed to grow. And so I grew within the industry, and I started as the assistant. I became a retail stockbroker, and that migrated into being an institutional salesman. And then I also did corporate finance, where there's really kind of the whole investment banking industry, where you're really working with those companies to help build them, give them the capital they need, and give them the advice that they need to be a public company. Because most of the work that you do in the investment banking industry that I was in was public. There is obviously investment banking that is private, but everything that we did was public.
Yeah. Okay. Yeah. What's the difference between private and public?
It's just the access to liquidity in the markets. As a public company, you have a lot of filing requirements that you're filing everything with the SEC or the Securities Commission of Canada in the case of where I was, and all of that disclosure and information is to protect the investor, to be able to really look into the business, to know what is really going on. But the core difference really is that as a shareholder, you have the opportunity to liquidate those shares in those public markets and buy those shares in the public markets.
Okay.
So a lot of private companies, people don't get access to. If you're a big venture capitalist or you got a whole lot of money, people will call you to invest in private companies, but you're going to be investing your money for anywhere from 3 to 10 years before you're going to get that money back.
That return. Yeah.
So
it could be a bigger return, but it could be a long time before you get it.
Correct. And most people they like to, it gives them comfort that they can buy and sell in the public market because there's that access to liquidity.
Mm-hmm. Yeah. Okay. That makes sense. Mm-hmm. So let's kind of step back before you jumped into the marketplace. You were playing some baseball.
I played some baseball.
What position? Where did you play?
I was a catcher, and I was at a time in the 80s when catchers were very, very difficult to come about for the professionals, professional teams, and being in Canada, there wasn't a lot of scouting going on in Canada for the major leagues. But I was fortunate enough to have some interest from some U.S. teams. I ended up coming down to the U.S. to play at school down here. Unfortunately, or fortunately, God had a plan, and I got injured and went home, and shortly after met my wife, and here we are 29 years later with 3 kids, 4 grandkids, and loving life. So but still thoroughly enjoy the game and love to play it. And it's a good game.
It is a good game. It's a fun game. What a hard game. I mean, you go 3 for 10, and it's like
you're successful.
Right?
I wish life was like that.
Yeah. Well, if you go 3 for 10 on private placements or on that's not bad either.
Hey, a lot of times, the venture capital model in the private markets primarily is 1 for 10.
1 for 10.
You get 1 right out of 10. You have 9 of them go out of business.
Yep.
You get 1 right, and you're making a ton of money.
Yeah.
And so that is the way that the industry thinks in venture capital. Private placements, earlier stage businesses. A lot of them do fail, and it takes a lot of effort and time and planning and everything to make a business successful and get it going in the right direction. So if you can hit 3 out of 10 in that private world, then great. And the way you hit 3 out of 10 in baseball is you put the right coaches around you, you put the right people around you, the right team around you, and that's what gets you there. And it's the same thing in investing. You just have to know the right people, make sure you're getting in with the right people and working with good, honest, hard-working people. Because nothing comes easy.
Yeah, no, I agree 100%. It seems like, in the industry, there can be a lot of maybe not so ethical people, or you hear stories of people losing everything and they put it into this company that was supposed to do so great and all this kind of stuff. So, how do you avoid that? How do you look for that? What do you look for? Obviously, you're an expert, but if you were to give advice to, or just encourage somebody, what would you tell them?
Well, it's that there are a lot of people in the industry, and there are bad people for sure. And there are people that are truly trying to make it happen, but just don't know what they're up against. Right?
Yeah.
But it's that old thing called greed that really can trick people into putting the money in the wrong spot. And it really just boils down to hard work and again, knowing the people that you're working with. So how do you avoid it? You just have to do work. And a lot of people, unfortunately, don't want to do work. People don't want to read agreements. They don't want to read filings. They don't want to read all the information. But
they just want to press the easy button. Hey, put it in here.
Everybody wants, yes. Hey, give me 5,000. It's going to turn into 100,000 in 6 months. And you see it time and time again. And probably most recently in the Canadian public markets, anyway, it was the cannabis industry, and then we won't get into it, but the whole world of cryptocurrency, and these opportunities come about, and it gets into the media, and everybody gets excited about it, and that comes back to the screen's all green, and people are jumping in when they shouldn't be. We used to have a saying that by the time a story about an investment gets into the newspaper, it's typically too late.
Yeah.
You
probably should not buy it.
Right. And there are good longer term stories, but so much, and it was so blatantly obvious if you looked at the cannabis industry and what was going on in the investment world with it. The values of these companies were, somebody have an idea about a cannabis product, and that it was the company's valued at $100 million, and they haven't even sold anything yet. And but people are throwing money into it, left, right, and center. And we went my experience with this learning this was the internet. When the internet came about in the early 90s, and that was where I was really getting into the investment banking business, and we were running deals, and I had these kids coming in like kids, I mean, 20-something-year-old with a one piece of paper on this idea for an internet website, and they were getting $100 million valuations for their business.
Holy
And I couldn't bring myself to do it. And honestly, I missed a lot because that kid, had a $100 million valuation on his business, went public at $500 million valuation. He would have made 5 times your money if you had to invest it. Now, it ultimately went to zero very shortly after.
Yeah.
But, that comes back to you just have to do your diligence to understand, to know what you're getting into.
Yeah.
And where it can go and what are the risks of getting there.
Yeah.
And if you're not willing to do the work, then again, put the right people around you that can at least look at it.
And
give
do the
you
work.
you being in real estate, you can look at a home and understand the value of it pretty quickly because you understand the market forces in and around behind you and people that eat and breathe the market the stock market can give you the same kind of advice.
Yeah, no, I agree. That's a good analogy. I don't know if you followed any of I know they just, XRP, it's a cryptocurrency, but they just got approved. And I think someone this morning was saying it went from 48 cents to 98 cents and all this other stuff. And it's probably too late,
So you hear it again in the markets, you hear stories of when, your taxi driver's asking you about some investment. It's too late because they're hearing about it and they don't have an opportunity to be. That's a different world now because they have a ton of access to information. But back in the 90s, they didn't.
Yeah.
And literally, when the .com boom was taking off, and I would get into a taxi, and the taxi driver would be asking me, "Well, what should I be doing? What's this and that?" So again, the story about the crypto people. I reflect back. Wasn't too many years ago, and hey, I was wrong, but because it went a lot higher. But I'm still not a believer in crypto.
Yeah.
And I was in an elevator, and there was a couple people in the elevator, maybe early 20s, late teens, somewhere around there, and they were talking about how they had to get all their money into crypto. And I'm like, but I didn't say anything to them, obviously, but they don't know anything about what this world is or what's going on, and they're all, here's these young kids putting all their money into crypto. And the advent of the pandemic, a lot of young people ended up learning about trading, and they all started dumping their money into crypto. And like I said, when I heard that conversation, because Bitcoin at that time, I remember, was around 13,000, 14,000. I was like, this is over. Like, it's not going to go any further. And it did come back to about $10,000, but then ultimately went to 60,000. So again,
sure. Yeah.
So who knows where the world of crypto is going to take it? There's a ton of risk. There's no intrinsic true value to cryptocurrency, so it has a ton of downside versus the upside from where it is now.
Yeah.
You can't have something worth billions of dollars with no intrinsic value.
Yeah. No, I agree.
Yeah.
I agree. Yeah, it's an interesting world for sure. So, but yeah, I think like what you said. I mean, no one should be taking all of their money and putting it into one thing, anyways. So
correct. Correct. Even if it's your own business, obviously many people start their own businesses.
Sure.
You want to invest in yourself, but unfortunately, a lot of people do. They put all their eggs in one basket, and when that basket gets a hole in it, it can get pretty dicey pretty quickly. But yeah, no, you definitely want to diversify to a certain extent.
Sure.
I'm not a believer in big, broad-based diversification.
Yeah.
Because it doesn't take that much effort. Even somebody with a full 9-to-5 job that is not wanting to do anything with their money, other than throw it into a bunch of diversified mutual funds. It doesn't take a whole lot of effort to read a few research reports, watch CNBC, read articles and stuff about businesses, understanding their balance sheets, understanding their income statements, to put the deck of cards a little bit in your favor.
Yeah.
And so I think for the average person, no matter how much money you're running or how much money you have, 10 stocks is
you don't need
you don't need a ton,
Yeah.
you know, and so get to know those 10 stocks, stick with those 10 stocks, and you'll know when the time's right to exit if that time ever comes. You know, good companies, you buy them and stick with them. It's actually kind of boring.
Yeah.
You buy them and stick with them. There is the world of trading, which is
totally different world.
Is a totally different world, and it's exciting and lots of emotions and ups and downs and everything with it. And it can be very lucrative if again done right, but there are risks involved. And so for your average person, it really is about finding those investments, putting your money in, and sitting back and letting it grow.
Yeah.
You know, everybody knows Warren Buffett.
Yeah.
It's very boring.
Yeah.
What he does.
Yeah.
You know, he finds the little companies and he buys them and he never sells them.
Yeah.
And they just keep growing and growing and growing. So.
Yeah. And yeah. Okay. And then a lot of what he does to leverage some of that. Do you know? Does he like borrow against the stock at all to leverage that money, or does he just let it grow and sit?
Yeah, Warren Buffett doesn't use leverage. He's one of the wealthiest. I don't know if he's where he is on the number of wealthiest people in the world right now, but his is not about taking that leverage risk. His was always about investing what you have. Don't move outside of your means. Finding a good company and sticking with it.
Yeah.
And the kind of things he buys, he really looks at. And there's a lot of extremely successful investors over the years that all they do is they look at your everyday life.
Mm-hmm.
They're not trying to, you probably heard Warren Buffett didn't believe in cryptocurrency, didn't invest in cryptocurrency. Everybody was calling him an idiot. Same thing happened in the 90s.
Yeah.
Here's all these tech companies that were coming out for the internet, and he wasn't buying any of them, and everybody was saying he was the old school guy, he doesn't know what he's talking about. And ultimately he was right, because all the valuations of those businesses came out. Yeah, a few rose from the flames, and there's some fantastic companies, and if you stuck with them, you've made a ton of money. But he really just looks at your everyday life and what you do, and buys companies that support that. So, railroads, oil and gas companies, media companies, personal hygiene companies.
Yeah.
It's all very basic, but it's
like the boring stuff.
The boring stuff. And he just makes sure that company has good quality management, and looks at their balance sheet to make sure that the balance sheet isn't too leveraged.
Yep.
And he invests and sticks with it.
Yeah.
And again, it's very boring.
Mm.
And that's where you can have your own portfolio can be those 10 stocks, and you maybe take 20% and you do some more exciting things with it and trade it or look for new little ideas, and you get 1 out of 10 right, and you make a lot of money.
There you go. So okay,
yeah.
Nice. So tell me a story, maybe your biggest lesson that you've learned in this whole investment banking industry. Maybe where it didn't turn out so good, right? But you learned a lot.
I had a lot of those.
I mean, it comes with the nature of the business.
It
but
does.
Maybe one that stands out to you.
Well, the one that stands out for me is the first real big loss, and it was my first real deal that I worked on.
Okay.
I won't say on my own, because it was a collection of a couple of people within our office at the time.
Mm-hmm.
And it was a company that was going to be putting phones and internet connectivity into airplanes.
Oh.
And this again was mid-90s, so the internet was still brand new. And so having that connectivity on airplanes to be able to speak to somebody,
mm-hmm.
and as well as use your computer to communicate while you were in the air, to me, it sounded like a great idea. And
sounded like a great idea.
Sounded like a great idea. So put all my eggs in one basket, and that was me personally.
Yeah,
so
personally.
Yeah. Yes, that was me personally. So I put all my eggs in one basket. Had some other investors that had joined us in the transaction, but it ultimately failed. Not because the technology didn't work. not because there wasn't demand for it. People obviously, we all get planes nowadays, and everybody wants connectivity when they're up there. So it was the right idea. It was too early,
Yeah.
and to deal with the politics and the sheer size and bureaucratic structure of the airline industry was a mountain that I had no idea was as big as it was.
Yeah.
I was young.
Yeah.
And I was young, and so that was a real life lesson. I swore at that point I'd never invest in another airline-related business just because of the politics and the bureaucracy. So ultimately, at that time, another company got the first big contract. This was a startup, right? We just had no revenue, nothing.
Yeah.
And another company got the deal with inferior technology, but it didn't matter. They knew the right people and had the right connections. And they got that first big contract to do that deal, and that company went to zero. Went to zero. So that's the one that sticks out in my mind.
Yeah.
And there's been a lot of other investments that, I haven't had any real true zeros since then, but I've had a lot just move sideways and nothing really happens much. So you're not making any money, but you're not losing any money.
Yeah. Well, that's at least good.
That's good.
It's wisdom in that somehow.
Yeah, there is wisdom, but it's always nice to be making money.
Yeah, no, I agree. Yeah. What was maybe one that kind of stands out as a home run? Like you're like, that was one that was a good one.
So again, it was probably my first home run, and so I had my first deal that I ever worked on was a blow up, and then it was a few smaller deals here and there, and then I had the first big home run was again in the as the internet was evolving and we were moving to mobile devices. BlackBerry was a big thing at the time. That came out. Technology came out of the University of Waterloo. We worked on that deal to bring Research in Motion, who was BlackBerry. We brought that public, and obviously that was a great investment. But the home run we had was as we learned and understood more about this world evolving to what we take for granted, I would say today, of having our mobile phones and what they do, is everything that is getting passed through the internet or through the air needs to be encrypted. And if it's not encrypted, people can pick it off, hack it, and everything else. And so this was a company, again, it was a small technology at the University of Waterloo, and they had it was called an elliptical curve crypto system. So the way that cryptography had been done at the time was no different than if we put a 6-digit passcode, a numerical passcode in to get into your phone. What they did is they had a numerical passcode that was literally thousands and thousands of characters that would, say, here's your data. We would put this lock and key on it with all of these characters, and then when it got to the other side, it would have all those characters. The other side would know how to unlock those characters because it would get access to that passcode. And that worked for computers, it worked for big domain or big processor devices, but as these phones were coming out, we knew that you needed to have something that was way more efficient because of the computing power of those BlackBerry devices at the time, and or ultimately the iPhone and everything else, had to be able to encrypt that data. So this elliptical curve crypto system was really amazing, absolutely amazing. And came out of the university, and we transferred it into a company, and we funded the business. And it ultimately, it's interesting. It was one of those things. So we funded the business at the right valuations. There was a lot of hype still around the internet at that time. And the market suddenly, and it was public, and the market came in and suddenly took the stock from 50 cents to $40. So way overvalued, had no reason to be that high. But the market was very excited about it for some reason, and that was a big win. And so we, myself, all my investors over the started to liquidate between $30 and $40, and ultimately it came all the way back down to where it should have been. It should have been in that kind of $2 to $3 range as the business built, and ultimately it got taken over, and actually researching motion ultimately ended up buying them. It ended up from a business standpoint being an okay investment, but from an investment standpoint and the market dynamics that took place, that was a very successful one.
Yeah, it sounds like it. Nice. And so now you help companies go public, or you do private investing, private placements, in investment banking. And so how do you help business owners who are wanting to get the funding, wanting to go public? What do you look for? What are they looking for? How do you help them?
Yeah, so when I was in the investment banking industry, you see a lot of really good little companies. They come to you with the money they need and what they're looking to do, and they're interested or intrigued with this whole idea of being publicly traded.
Yeah.
And they want liquidity for themselves or that liquidity for their shareholders, and they want the capital to grow the business. And when I was on that side of the table, a lot of these little companies would come that were very interesting, but they had no idea what it was like to be public. Mm-hmm. And being in that environment, we can, tell them, you're going to have to take care of this idea of being public. It's not we do a transaction, have an IPO, and
also that's great.
Yeah, that's great. There's another whole new side of your business you need to run. Being public has a lot of aspects to it, no different than your current business where you're trying to market your product or your service, and building that business, you need to market your stock.
Yeah.
You need to talk to your investors. You need to have a whole infrastructure in place to be able to speak to the market.
Yeah.
And a lot of good little companies struggle because they don't do that properly, and they go public and they kind of get lost in the marketplace. And so having that experience and kind of bringing it to the other side always made sense to me, because now I'll work with a small company. I'll make sure they understand what's going to be needed of the company to be public. I and my colleagues will help them put all of that infrastructure together for them.
Okay.
But also, when now working with that company, I represent that company speaking back to the market and speaking back to the investment banking industry, so that I can make sure they're getting a good deal. They're not dealing with somebody that isn't good. Those guys are out there, and making sure the structure of the deal is favorable for them and their shareholders. Because again, the bad guys will try to put structures that are very poisonous to their shareholders. And then
you're taking care of everybody. It's like not the middleman, but you're the, I don't know what the right word is, like advisor.
Financial consultant, really kind of what I pointed as, capital market financial consultant is kind of the way I position it. And the investment banking side likes it because
that's where you came from, so you know what they're looking for.
Right, and those guys who, when I sat where they are and I had these great little companies, they know one of the risks they're trying to evaluate is, does this guy know how to be public?
Yeah.
And so if they see that me and my colleagues are on their team, it gives them a comfort, because they know somebody's going to make sure that things happen that are supposed to happen. And so it really helps with that as well.
Nice. So there's a handful of projects that you're working on now. Are there any of them that you want to talk
about? Well, the one that's interesting right now is, again, it goes back to who you know. It's a gentleman that I worked with back in the 90s. He still lives in Toronto. And he reached out to me through the pandemic. We've always stayed in touch over the years, just here and there. And we used to do work together in the 90s. He's always been around the public markets and the capital markets. And when the pandemic happened, uh, his business, which was really about part of that idea of being public. You need to make sure that you're continually out speaking to potential investors and new investors and your old investors and everybody else. And his business was really doing that for very early stage companies. So he's always been around the public markets helping small companies do that. And pandemic hit and that business shut down completely, as you would expect. But what came of it was he had always had in the back of his head this idea for trading stocks, and the pandemic allowed him to sit in front of his computer and try to execute on his ideas. And so this would have been probably early 2021. So the pandemic's probably in full flight right around that time.
Yeah.
And he started doing these trades in his own account with his own money. So the whole emotional thing, he started making money. And he reached out to me in early 2022. We hadn't spoken in probably a couple of years at that time. And we just kept getting caught up. And I said, so what have you been doing during the pandemic? And he's like, oh, well, I've been working on this trading system, and I'm up 250%. And I'm like, in how long? He says, about 18 months. And I'm like, that's unbelievable, right? He goes, yeah, I know it's really good. And he goes, I have a system. I'm still trying to tweak it, make it better. So I asked him about it. Obviously, that kind of return you can't ignore.
No.
And he explains to me what he's doing and how he's doing it. And he's very structured, and he has a very disciplined approach. And it was fascinating to me that he was able to be that disciplined, because, again, that's where most people fail when you're trading your own money. If you're doing it with other people's money, it's easier to be disciplined, but he was able to do it. And he shared it with me. I said to him at the time, can you let me know when you're doing a trade so I can kind of follow along and validate what you're telling me you're doing.
We'll make sure this is legit.
And 4 months later, he's up another 40%.
Wow.
So we got to talking about the idea of really putting something out there that is an alert system, that when he does a trade in his own portfolio, we can basically send out an alert to investors, and they can follow along if they want to and mirror his trade or not. It's going to be up to them. So his name's Greg Beckett, and he thought this made total sense, because he's always been about trying to help out the earlier stage investors. Not making the rich even richer, make the average guy be able to make some extra money. And so we've started putting this business together, where we're going to offer an alert system that people can subscribe to for $50 a month, and not cost a lot of money, and just have a subscription that they can be alerted. So we're about to launch that here soon. That'll be an interesting business. I've been around subscription businesses around software, and they're very lucrative from an investment standpoint. And this, I think, is going to be very lucrative from the actual subscribers standpoint. Bringing in a lot of value. And
Definitely.
At $50 a month, which is our launch price, they don't have to be trading an awful lot of money to be able to substantiate. Because his trades, his average over the last 2.5 years has been around somewhere between 2 to 3% every week.
Every week, 2-3%. So you're getting at least 8% a month.
Yes, and if you're compounding it, then every trade, if you just keep compounding it, that explodes.
That's very lucrative. So it's a trading platform where whenever he makes a trade, he sends out a message, and whoever's part of this platform, they get the message, and then they can decide if they want to invest in trading.
Correct. Okay. Everybody's busy, and not everybody. I obviously get the alerts. I know his system and what he does now. But I'm really kind of helping more on setting up the business side. He's the trader. And so, I got an alert this morning, for example. that he jumped into the market, and I won't get into what he trades and how he trades, but literally it's two stocks. There's two stocks he trades. One's for the long side when the market goes up. One's for the short side when the market goes down. So if you buy the short one, the market goes down, your value goes up. And there was an alert this morning. I was coming down here to meet you. I couldn't put the trade in. So, and it's up 3% today. Yeah. So, I missed out. So everybody's busy. You're not going to get into every single trade, but get into as many as you can. And his trades are always 3%. You get out, take profits. If it drops 1%, you stop loss. You're jumping out.
Okay. Nice. Yeah. So it allows for almost the person who is busy with life doing stuff, but they're able to look at their phone and make a trade in 30 seconds.
Yeah, everybody has their phones, and you set up your alert, and you get it. If you are in a place, most people can do trades from the phones.
Yeah.
Pretty quickly nowadays. So in the old days,
a little different.
It wouldn't have worked. I still think back to in the investment when I started in the retail place. The way an order took place is I got a phone call. I would phone my trader. My trader would run down to the floor to do the trade. Then they would phone back, and then
literally playing telephone.
It was playing telephone, and then you report it back. So to execute a trade, it was still pretty efficient because computers were really coming on board by then. That's back even before that was worse, but it would take 5 to 10 minutes to get a trade, and that was assuming that you could get a hold of your trader, or the client could get a hold of me or whatever it might be. But nowadays, it's a few clicks on your phone, and you can get into that trade pretty quickly.
Yeah, no, that's awesome, and it really sounds like you're trying to get power back to the people and just the young, or business owners, or just the professionals or not professionals that want to be able to kind of take control of their own investing in a way.
Yeah, there's a lot of companies out there that have these alert systems, if you will, and their algorithms that the computer will spit out. This is the time to buy, this is the time to sell. There's not a whole lot of human input into that, other than your own decisions. It'll say an alert that says this kind of looks like it's a buy for this stock or whatever, and an individual has to make their own judgment because that's the way the platforms work.
Yeah.
In this case, you have an actual person looking at all of these technical indicators, and when the stars line up, he actually puts the trade in to his account, and you're getting an alert of that trade that he's making. So it really is a low risk trading. We talked about the risks before that you take in your portfolio. In doing this, you're jumping into the trade and jumping out.
Not a lot of risk at all.
No, and you're in the
Yeah.
And then he ultimately found these, they're called the Ultra Pro shares. And these mirror the NASDAQ. And if the NASDAQ moves 1%, they move 3%. And that's the only thing he trades is those ETFs. And it's proven obviously to be very favorable. I think his portfolio since now inception is up. This is compounding. Because he compounds every trade, because every time he gets his profit, he rolls it and puts it in the next trade. But he's up 400% right now.
Wow.
So,
yeah. And to be at such a low risk of being cash a lot of the times, and not having taking out almost the thinking and emotion for the consumer, in my mind, makes a lot of sense.
It does, and that's why he and myself, to give this opportunity to people to choose to follow along if they want.
Yeah.
And at a price point that obviously is a no-brainer. I think it's going to be an interesting venture for us, and I think it'll be very successful not only for us but also for the people that join.
Yeah, no, I agree. Who is this for in the perfect world? Who do you think this is for? This person?
It requires some flexibility because everybody has a job and everything they do day to day. So you have to be able to have the flexibility to be able to look at your phone, read your texts, and execute trades. So, I don't view it really as something for the ultra wealthy because they don't have the time or ability.
Yeah, they don't really want to.
Well, they're so busy with it. Everybody views being wealthy as that you're sitting by the pool drinking your cocktail all day long. I'm around a lot of wealthy people, and these are some of the top investors on the planet.
Yeah.
And they don't sit around any pool. They are busy all the time. It's just in their DNA to be doing stuff all the time. Yeah. So to get an alert and execute a trade, they won't do that. I think it's your average person that has your 9-to-5 job, has some flexibility to be able to be on their phone to execute trades and see them. Obviously, entrepreneurs or early stage investors that are wanting to get a good return on their money. So it really is anybody. And then for people that don't have the time, but like the system and like what they see and look at the return, we are going to ultimately launch a fund that they can put their money into that fund, and that fund will execute those trades for them on their behalf.
Okay. So for like the stay-at-home mom, real estate agent, software engineer, people who are working from home, and they can access their phone. For like retired guys playing golf on the golf course.
Retirees, I've had a lot of good feedback from retirees because retirees get bored pretty quickly.
Yeah,
and so this is something that's it's exciting and obviously profitable.
Yeah,
we've retirees that are looking for something to do with their time and their money, so it addresses a very broad audience that wouldn't typically have the time to be able to trade, because trading is a full-time job. Greg literally needs to sit in front of that computer pretty much all day long. Some days it's very obvious that there isn't going to be a trade available to make happen, and he executes anywhere from, I would say, on the low end 2 trades a week, and on the high end 6 trades a week. And it averages, I would say, 3 trades a week. But to execute those 3 trades, he's in front of the computer all the time. And that's the slogan of the business. It's going to be called Greg's Easy Trade. Again, it's very simple. It's Greg's what he's done and what he's developed and put this together. But it just says we watch the markets all day, so you don't have to. And he literally has to be in front of that screen all day. And when I was a trader back in the day, to be a good trader, if anybody wants to do day trading on their own, the only way it works is if you're staring at that screen all day long.
Wow.
Which some people enjoy. I used to thoroughly enjoy it. It's during the pandemic, I got back into it a little bit because there was nothing else to do. So everybody was jumping in doing the trading, and I enjoyed it. And I was a very disciplined trader, both for my clients and my own money, and I got back into it, and I was disciplined. I didn't do nearly as well as Greg was doing, but I had my goals, my daily dollar goal, and when I hit that daily dollar goal, I'd stop. So
the greedy thing. You weren't trying to be greedy.
I wasn't trying to be, and I learned that back in the 90s. I'd get into trades and get greedy, and ultimately lose out on the trade if the right greedy did it. It takes a lot of discipline, and that discipline that I use, I've been teaching Greg the same thing, which is, hey, Greg, you don't have to hit the ball out of the park every time. So if you get to your 2 or 3% weekly target, stop. Right? You don't need to keep trading. And so he has kind of slowly been bringing that into his thought process and how he's going to approach this going forward, because he needs to have a life too.
Yeah, no, I agree. I agree 100%. And you did mention a thing where if it was somebody who didn't want to have to do the trades, it sounds like there's a fund, a hedge fund that will be available in the near future for people to be involved with.
Yeah, as we started talking to a few people about launching this, and primarily it was wealthier people, as I said, that are too busy to do this.
Yeah.
And they were like, if you can get those kind of returns, I would love to do it. I just don't have the time. Will you do it for me? And yes, we can do it for you, but you have to have a proper fund set up. You can't just ad hoc do it for everybody.
Yeah.
It's against the rules.
Yeah, no, it makes sense.
So we're going to set up a proper hedge fund and get that launched so people can subscribe to that fund and participate that way if they so choose.
Nice, awesome. Well, Brad, it was great having you on the show. I think there's a lot to learn, and I'm continuing to learn. And it's just such a fun realm for me to learn from. So thank you for your time. Really appreciate it. If someone wanted to get a hold of you and maybe they got a company that they're thinking about taking public, or they want to get involved with the trading, the platform, or the hedge fund, or whatever it is, how do they get hold of you? What's the best way?
Well, the best way is, and I'm always happy to talk to any entrepreneur about the business, and if the public markets make sense, depending on what kind of capital they need and where the business is. So I'm always happy to spend that time with entrepreneurs to talk to them and educate them. But my website's probably the easiest place to go, and that's groupxfinancial.com.
Group X, as in X Financial. Yeah.
It's numbers.
There is a number too.
Yeah. So groupxfinancial.com, and my contact info is there.
Okay.
And a little bit of information about the public markets and why I want to consider them. We didn't touch on it really, and this is, I think, very important for early stage companies to know, is the capital markets in Canada are very favorable to early stage companies.
Yeah.
Canada has been used to investing in an idea of drilling a hole in the ground, pulling out oil or a mineral or any kind of mining adventure. And so the marketplace understands early stage companies. The public marketplace understands early stage companies and the risks that come with it. And so therefore there's a very good infrastructure in Canada to support businesses that are even valued at only $10 million. Where in the U.S., if you're not, if your business isn't valued at probably $500 million, you won't get anybody to pay attention to you in the U.S. It really is hard to get the liquidity in the public markets. But in Canada, you can do that. And I partnered with the Toronto Stock Exchange to help find entrepreneurs and good early stage businesses to take advantage of this market in Canada and the kind of early stage businesses it will support.
Nice. Okay. Awesome.
All right. Well, thanks for having me.
Absolutely. It was a lot of fun. We'll do it again.
All right. Good seeing you.